Well, as we noted, the big Canadian banks reported higher provisions for credit losses. They chose to set aside more money for loans that might not be fully repaid in their latest set of financial results. Let's talk to our next guest about that. He sees this as a sign of a potential economic downturn. Let's talk to Hanif Bayat, founder and CEO of WOWA. That is a Canadian personal finance platform. Hanif, thank you for coming in.
Nice to have you.
So we saw one bank after another report fairly significant increases in provisions for credit losses. That's a judgment call by the banks. They decide to do that. It's possible in the future they may take some of those provisions out. It is very determinative of profit and profit growth. What is your takeaway from what we saw in the quarter?
So when we look at the bank's report, look, it was released like 10 days ago. There are a few parameters that indicate the banks are expecting an economic downturn. Is both like provision for credit loss, and also allowance for credit loss, but also the loan growth. So what we want to indicate that, when we look at these numbers, provision for credit loss reached for the total big six reached $6.4 billion. That's 15 basis points. This is historically high. Means from 2010, this is except 2020, the COVID era, this is the maximum. As
a proportion of all loans outstanding.
All loans, exactly.
Right.
So, and also when we look at, again, allowance for credit loss, we see a similar pattern that it is also the maximum, except a few quarters during COVID. And also the one thing that media paid less attention is the loan growth. So when we look at the total loans of the banks, which is now around big six, around $4.3 trillion, this quarter has the least annual growth, excluding just one quarter in the last 15 years. And that quarter was mainly because of the BMO was dealing with the Bank of the West loans. So if we exclude that one, we see that in the last 15 years, the loan growth this quarter was the lowest, was 3%.
And there we see it on the graph. There's a long-term view of loan growth at the Canadian banks. You can see the line has come down this year. And if we just flip to the earlier graph we saw, we'll just put that in context as well. There are provisions for credit losses as a percentage of total loans outstanding. You see a huge spike, of course, during the pandemic period. Otherwise, the point that Hanif is making is that this is an historic high that if you exclude the pandemic period, you go all the way back to 2010 before you see a run-up like this.
Hanif, do you think that maybe this is something that is this kind of quarter only? Maybe that's why investors maybe were looking past this, because, banks were basically rallying through these earnings. How do you reconcile, this very astute observation that you're pointing out with the fact that investors have kind of been buying them anyway?
Okay, so we should, since 2018, the banks are using IFRS 9, which is very cautionary forward-looking accounting. Means that what we are seeing here is actually big part of the actually provision for credit loss is for performing loans. Actually, we calculated for each banks, and I'm just giving an example, 40% of the provision for RBC was in performing, 29.5, TD also was percent of the provisions are from performing. So when we look at it, it means that this is a very cautionary thing that they are doing. It means that they're putting aside, and as you said, 2020, they may come in 1 year later and they say that, okay, back. Another thing that actually is very important, when we look at it, was the nature of these loans. When we look at the nature of these loans, unlike that many people think that, there are mortgages. No. This $6.4 billion provision, only $350 million is mortgages. So that's something that people think that, it means it's a mortgage. No, it's not. These are more about personal loans, commercial loans. It depends on the banks. Also, there's some part because National Bank Accord, CWB, and is dealing with the loans of the CWB. But when we look at it, is that these are personal loans and credit card loans that IFRS 9 ask the banks to be cautionary and go in performing loans and evaluate that what they think that in future, is there any possibility of like default for them or not? And the same with the national bank. National bank that acquired like CWB, again, because of IFRS 9, they should go over all the loans and they say, okay, something is bad there. You know, they should already put it as a provision. And also another factor is that we may look at the price over the earning of the bank after all these provisions, like because the provisions are already deducted from the earning, we see they are in the healthy ratio. So there is no concern about the bank's performance, but there is a concern about outlook of the economy. Means that when you see the loans increase, like it's 3.3%, means that banks become very cautious in underwriting the loans.
The rate of unemployment in this country is now 7%, the highest it's been since 2021, and it was coming down at that period from the huge level in the pandemic. That's an important number to watch in this context, correct?
Exactly, and specifically if you look at, like this 7% is for whole country. When you look at Toronto, I think it's 9.7%, means we are in the margin of like double-digit unemployment in Toronto. So there are concerns like for the economy, but from the banks, they are doing the best from like expecting what will happening, and they're putting the money aside. Like we have like in allowance for credit loss now is like 36 billion, which is close to 0.9% of the all loans. So $36 billion by Big Six were allocated for credit loss for possible thing that goes wrong. But when we look at the whole thing, what is clear is that all the indicators are signaling that the banks are expecting downturn. For example, even the loan write-off this quarter was 10 basis points, which is the highest in the last 10 years, except one period.
Okay, we'll have to leave it there. Hanif, thank you very much for coming in.
Thank you for having me.
Hanif Bayat is founder and CEO of WOWA, a personal finance platform.